models for all of this?
So I'm going to make it easy for people. Everything is about supply and demand, right? The more supply there is, the cheaper it is. The more demand there is, if supply is stable, the more expensive it gets, which is why we've had the problem with prices, because there wasn't supply of oil, but there was demand as everybody came out of pandemic. So what have we got going on in ETH? We've got a gigantic supply shock. So what is the supply shock? The small supply shock is right now, every day, miners are selling ETH. They probably sell 80% of everything they receive because they need to pay for their cash flows and their electricity and all of this stuff. So they stop. That's about 1 or 2 billion a month. Okay, that's nice. But then after that, we've also got the fact that staking's coming.
Mm-hmm.
Currently, there's about 9% of all ETH staked. Now, estimates are it should go up to around 30%. What does that mean? It means 30% of the ETH comes off exchanges, comes out of DeFi, comes out of CeFi, and is untouchable.
Yep.
Right? You're removing a gigantic amount of supply from the market, and it's locked for a year. So you can't do anything about it. Yes, you can trade using staked ETH and stuff like that, but it's not the same thing. So you've got this. So you're taking that out of the market. So you've got a huge supply shock. On the other side, you've got a massive demand shock, which is firstly, a lot of institutions wrongly didn't like Bitcoin because of ESG concerns. Proof of stake gets rid of that. Additionally, it now has a yield. So that's something that institutions love, is a yield. So now you need to make one asset allocation decision, which is, I believe in this Web3 technology world. So where do you allocate? Bitcoin or ETH? It's going to be ETH. Why? Because you're going to get something between a 6 and a 10% yield.
That's right.
So that's extraordinary. Yep. And you've got this deflationary issue of burning the tokens based on network activity. So that's another massive supply shock. So there's less ETH around every year. It's getting locked up. And you've got no miners. Put against this massive demand shock, and we've got the macro cycle turning. I look at this and think, holy shit, this is a massively imbalanced supply and demand situation.
Yeah. I mean, we shouldn't underestimate the complexity of what's happening right now. I mean, it's like, as a techie, I can tell you, it's like, the best example I could give you would be like changing the engines for an airplane mid-flight without landing.
With a new technology.
Right. With a new, relatively unproven technology underpinning the engines that you're replacing the old engines with. And so it's pretty clear to say that, well, they've admitted it 100 times now, that they've all underestimated, the entire developer community underestimated the complexity of this. And this is just one upgrade of a few to come, because we haven't gotten into sharding and other things that actually provide massive scalability to the network. But it appears to be working, and they've done it right, which is part of why I'm so incredibly bullish on Ethereum right now. And this is something that we've talked about here on Money Talks many times. Do you view, well, it sounds like you view Bitcoin very differently, and you've alluded to why. Do you hold Bitcoin still?
Barely, which I know everybody hates, right? Barely. Not because I don't like Bitcoin or don't think it goes up. I just think it goes up less.
Yeah.
We're looking at this as a technology and a network adoption model. So you want to back the network that's growing the fastest and has the most number of applications.
Yep.
That's the safest, easiest allocation. That happens to be ETH. Now, other earlier stage tokens, whether it's Solana or AVAX or whatever, are getting earlier on the adoption curve. So you get that accelerated phase. So they'll probably outperform. But if you're just thinking the safe, easy bet, we're now looking at the internet. The money of the internet is ETH currently. Nothing is exchanged in
That's
Bitcoin.
Right.
I mean, literally nothing. So the money of the internet is ETH. DeFi is built on ETH. NFTs are built on ETH. All of this is being built on ETH. ETH now has a yield. Yep. Stable coins are on ETH. And ETH has a yield. Okay. What's left? Yes, it's not fast enough. So people go to other chains for that. It's a bit more expensive. People go to other chains. But the broad encompassing of the space, this is the simple, easiest bet to take.
Will you do other crypto allocations to the Solanas in smaller amounts to, potentially look at that 100x upside given where they are in the adoption curve, or is there no point given the numbers we're talking about?
I just don't think I'm good enough, and I don't have the ability to spend all the time in the space. So that's one of the reasons I started the asset management firm, so I can allocate it to hedge funds whose job is that.
That's
so
what we did.
I do that.
Yeah.
But I do have a few bets. So I have a small basket of like DeFi, Uniswap and stuff like that, Aave, whatever. But I also have, the only other bet I'm taking really is Solana. So I've started to build a reasonable position in Solana because it has the next most number of developers, the network activity, and it's clear that their mission seems to be to use it as a blockchain for the masses. So, music, gaming, all of that kind of stuff. And I think the next phase is that. The next 200, 300 million people are going to come out of mass adoption and not from crypto heads like you and I who've been around for a while. And so I think Solana's a reasonable bet. Now, the chain breaks. It's not perfect. All of this stuff, nothing's perfect. And that should be at the price. We all understand that.
Right. So actually, speaking of which, I'm actually visiting family in New York. So I'm going to go visit this new Solana store in a couple hours when we're done, and I want to segue this into a last discussion, kind of memes and the NFTization of everything. But before we do that, like, what brings all of this wondrous discussion on how we're all going to make money on this next cycle come crashing down and go horribly wrong? Do you think about like what that scenario might be that has a non-zero chance of happening?
Clearly, if inflation stays higher for longer and rates stay higher for longer, crypto won't recover. Does it go further and lower? Possibly, because we haven't tested it in that environment. So the macro is one. Obviously, there's always the threat of regulation, but they tend to be temporary in nature. We've seen China, we've seen India, we've seen everybody kind of toy around with different regulations. It moves the markets for short periods of time, and then money gets reallocated through the system. So I think the macro is probably the biggest risk. And because I don't see how the network by technologists is not adopted. The technology genie is out of the bottle, and that's not going away. So every time you trade below trend for an extended period of time, you're getting cheaper and cheaper and cheaper versus the log trend of adoption. So Metcalfe's law makes it very difficult for assets to stay down for a long time, which is why everyone gets frustrated with technology stocks, because they're not cyclical, because they're driven by the same factors.
Yeah,